General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
I just tended to quarter notes and thoughts. Not really. Quarter review, macro narrative, reflection. What did the quarter deliver? Trend range. January started off tough. Trump took Maduro, and Syria, Iran started right around the end of February. So narrative wise, the market has been wait for the war and watch Trump. So it's just been choppy. So it's been choppy down quarter. Okay, that's actually interesting. Let's see. I don't even think I'll be looking at quarterly charts. It's on the other screen. Let's look at it. $20.26 here. So no, I thought the quarter was going up. I want it to look like. There we go. Could have been these equal lows. Apparent drawn liquidity had to be previous quarter low. and I believe that was November. Yeah, it was November. What was seasonal policy option is formed this quarter? Seasonal is midterm year. And Republicans can lose control of the House. Let's see. It's the cow sheet. Midterm. I'm right. These people are always right because they insider traders. Let's take a look at this. Democrats. Okay. Yeah, so this could slow down policy. Slow down policy if they break control of Trump getting all this stuff passed. Trade in the flows. Bias going into next quarter. It'll be bearish until May. Sticking with the cycles. This cycle was in play before the news. It's true. Like the news is convenient. Yeah. Framework performance audit. Did my quarter month week cascade hold together? No. Forecasting. Janky. Q1. But I did well. Considering the market regime or the market conditions. Where did it break? Janky ain't no word. I'm making it say janky. I capitalized it. Janky's not a word. I'm gonna have to add that to the dictionary. Where did the quarter month week break? Choppy war high VIX environment forecast didn't work so well for big moves. We chopped and dropped and popped based off Trump. Blood pressure. That's a sentence. That's a sentence right there. Weekly, daily profiles were printed early time, late week. So Monday hollows, and we had government shutdowns. Was in the news. It was Monday high lows, prints, and economic data. So weekly profiles. The tempo was thrown off. Were my targets logical with time and price? No. We have 3 targets. But I do take my bases. That's what I gotta do for real. I mean, like, you should go up there. You ain't going up there. Which PD arrays work? Stuff, ICT, teaching, base, quadrants, it's gold, dealer range, quadrant, levels, and expansion range, EQ. Aves and quadrants is go. DR quadrants, domain, expansion range, EQ. That's OTE. That worked this week too. 3 fixes to the framework. Bruise out there, move or tighten. More do not trade. Filters. Better shot selection. And journal. And off the charts. Decision quality, trade log review. I operate inside the plan. For the most part, yeah. But I notice sometimes to trade London or New York PM when New York AM is choppy. So I gotta just wait it out. That's the thing about sticking to a model is you gotta stick to it. Even if it chopped the time, you can look at the market for a week or two. Bam, bam, bam. Marquise lost cost of business. I messed up. Why? Lie. Why? Why do you even start brushing? Process. Notice difference between selling options and buying options. Is buying options, you have unlimited profit. That sounds good. Selling options, you have guaranteed profits. Well, not really guaranteed, but you get paid immediately. Hold on. Surprise motion between selling options and buying options. That sounds good. So you get paid immediately. It can be done faster with the objective. Because some dude was like, I want to make $600 a day. He'd sell the options to make the 600, and he'd be done. You know, take the same trade with the same goal, then not be done because of data. But you just never know. So having a stop point and a base hit goal that feels good will keep you content theoretically. Hold on, now to make this one line. Alright. I got it. Here we go. Know when to stop. Boom, that's the one line. Best confirmation secrets I had. Trick to confirm management. Um, the best. Say the New York reversal model. Yeah, I like that one. When New York makes the reversal, comes back in tags. So I'm gonna do the trigger to confirm management. Asia has untapped liquidity. I forgot how to do the thing. I think it was this. No. Is it alt? There it is. Asia has untapped liquidity. And it takes one side. New York versus takes other side. In AM session. Two trades I shouldn't have taken. Precise rules they violated. Any trade in Asia. No, I should be up in there. Any trade after 2 losses. What I will repeat. Showing up, being intentional, and looking for new ways to grow. Continue the pattern process. Quarters. Let's look at 13 weeks. That's terrible looking. Let's go here. Sweep both sides. This is actually kind of perfect with the OTE, drop down, chop. This looks a lot like what happened just in this week with this being arranged and this holding inside of it. This happened here, but large opening ranges and rebalances inside the range from a higher time frame perspective and a weekly perspective. I spell perspective right sometimes. Position inside the quarter where most hard was made. I'll say February before straight out moves. I don't know. Terrace was kind of choppy too. Maduro was love. That right before Iran started tripping. Process evolution routines I ran consistently skipped and the impact I observed. Journal routine is better. Less assets is helpful. And S&T spine QQQ. The one habit that moved the needle. Collecting data and journaling. Collecting data. Seeing my repeat. New standards for the next 13 weeks. Base hits. Compound. Identity and execution quality store. And my trading is me. Style, range fit, procedures run, playing windows only, mindset standard. We're scalping now. Two market conditions. Oh, well, one shot, one kill, as much. Procedures run. Yeah. Playing windows only. the most part. Mindset standard. Daily good input and balance to help with mindset training. That's what it really is. One lines of identity drift, if anything, then fix. No, yeah. Execution. Did I run the model plainly? Context right? Yep. I could have took less shots. A lot of times, just cause the model valid don't mean it's valid. Taking screenshots on entries. Execution honest. But even if you're honest, sometimes you know wasn't a good trade. By context, location, or risk or mental capital. So framework integrity. What I gotta work on. Is this the framework for this setup, etc., etc. Execution drift. What is the conditions? We maxed out range. Is there news? Is the range, target, and stop big enough to be worth it to make the goal easy? Pretty sure I took my allergy medicine. Boy, that pollen. Just attacked me. Q2 for monthly macro view for next quarter. Hold on, I put my nose. All right. So, monthly macro view for next quarter. Macro bearish. I think we get the war done soon for political reasons. So I don't think no more than 90 days for this But him and Maxim stage parental DOL seasonal lean. Let's get the seasonality right quick. Um, Here, price profile. Oh no, wait, seasonality. Mm, Is this dollar? It's S&P. It's kind of flat. April, May, June going into July. This is, let me draw this out. Because, so, the, it's not, it's not a very enthusiastic line. Bottom in May, seasonality wise. Let me grab a screenshot of this, just this part. Okay, now we can erase this and put this on. Put this part. Bam. While that's doing that, let's look at the MMXM stage. What is 50% of this? Monthly fair value gap. Makes sense too. But don't forget the discount fair value gap. And let's put the dividend range on this. Did this take liquidity? Yeah, it did. I like this candle too because it took. Put this here. Make this blue. That means this will have to hold. Which don't look like it'll hold. Not with how it fell. It can easily come back up here and kind of just play with everybody's emotions. The trade up will be legendary. This one kind of sticks out though because it looks like the immediate draw. See what this looks like in week terms. Hold up. Yeah, it was clean on the week too. All right, so MMXM or whatever stage. Market maker, sell model. Should I use the weekly chart? What's our next array here? Bam. Market maker, sell model. This inverse level should hold if we come back. Yeah. Most definitely. So MMXM stage is market maker sell model. Inverse level should hold and we should to target bi-weekly FEG or 50% of range. Parent DOL. Again, it's 50% of monthly dealing range. Or fair value gap, low hanging fruit. Let's make sure I don't get lost. Hold on. And seasonal lean. So seasonality is flat. The bottom in May. I think elections will heat up. A lot of this drama will be behind because politicians know they need low prices on energy, and I want to say a stock market that's not losing money to get reelected. So the bar should be good. Now, what if they pull out and then, like Iran keep doing stuff? That'll be like, and then they'll be playing right into what they want them to do anyway. Because then they'll be like, all right, we finna stop attacking. Then they stop, and then Iran, even though everybody know U.S. Israel started it, but they say, all right, we finna stop, and then Iran keep doing stuff that's gonna make them look like the bad guys. So that way they keep going, do them even more dirty, and then the next generation will complain about it when they do their charts. SPY. What is the specific reasons? No reason to engage just yet. Just bread and butter. But good. Let's think about top three triggers. Then triggers that flip the quarterly narrative. War ends. War ends. Um, Republicans. Oh, that won't really hit till later on in the year, the midterm. Tariffs and government shutdown, which what they doing that now, but nobody paying attention to it. Unless you're trying to get on the plane. Yeah. All right. That's the quarterly review. Y'all have a good day. Peace.